This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks trade higher as the Fed unanimously cuts rates by 25 basis points. Chairman Jay Powell tells reporters Donald Trump does not have the power to make him resign.
If he asked you to leave, would you go?
No.
The president-elect picks Susie Wiles to be the first ever female chief of staff at the White House. We're going to look at who else could join the new administration. Plus, the Bank of England warns of inflation risks as it cuts rates for the second time this year. We're going to hear from Governor Andrew Bailey. Good morning, happy Friday. Before we get to the markets, let's focus in on the earnings story coming through from the Swiss luxury watch and jewellery maker Richemont, coming in with first half sales just below the estimates, 10.08 billion euros. The estimates had been for close to 10.2 billion euros. We know there is a focus, of course, on the Chinese market, softness there in terms of luxury. Operating profit in the first half for Richemont coming in below the estimates. It's a miss in terms of operating profit for Richemont, 2.21 billion euros. The estimates had been for just shy of 2.5 billion euros. Again, 70% of its revenue coming from jewellery, so we'll look at the details around that as well. But it's the exposure to the Chinese market that is likely to have dragged on that company. We'll get more details through the hour. Let's get to the broader markets right now. You had another record yesterday across US markets, a 49th record coming through for the S&P, the Nasdaq as well, punching through a fresh record there. You saw gains for mega cap tech companies in the US. A little bit of softness when it comes to the banking space. Some of the gains that have come through on the back of the election just being taken off. But broadly, again, the optimism continues across the equity markets. Cross asset, there was a rally. You saw money moving into treasuries as well, yields low. We'll get into that story in the next couple of seconds. European futures then set for a bright picture when it comes to the Friday session, looking to gains of around 0.3% for European markets, looking to end the week in positive territory. Keep an eye, of course, on the politics of Germany, but some market participants think that a new government could be positive in terms of the fiscal impulse that may come through for that economy. The 10-year yield currently yielding you 4.33. Yields actually came down. They dropped 10 basis points in the session yesterday as markets continue to recalibrate. The Fed came through with that 25 basis point cut as expected. A little bit split the markets in terms of whether or not they go again in December. We'll be watching two inflation prints before that decision. The BOE as well coming through with a cut, 25 basis points, but warning on inflation and maybe additional cuts coming through next year will be at a slower, more gradual pace. Bloomberg Economics thinks they will hold at the next meeting in December. The pound in focus then got a bit of a move higher yesterday. Today, a little softer, down 0.1%, 129, largely down to a bit of dollar strength today after the US dollar dropped to about the lowest levels, or the biggest drop since about August yesterday. Brent trading at 75.23, currently down 0.5%. And Bitcoin, it came in above 76,000 for the cryptocurrency, just shy of that right now. Very, very modest gains. But again, just closing in on that 76,000 level for the key cryptocurrency. Let's cross over to Singapore right now. Avril Hong standing by for a check on the Asian markets, and we're waiting as well for details from the National People's Congress in Beijing. Avril.
Absolutely, Tom. We are waiting for details of potential fiscal stimulus, the readout, what we're going to get potentially for housing market support for China, or even local governments to ease their debt burden. That is what markets have been wanting to see. But if you look at the stock market performance, you can see how traders are bracing for disappointment. Of course, they've been for a while, especially yesterday, betting on the idea that China authorities would come through with stimulus to buffer against potential tariffs out of the U.S. But you can see how there is a turnaround today, or the erasing of the gains. CSI 300 actually managed to clock gains earlier of about 1.3%. Those have evaporated. As one trader puts it, yes, China might be better equipped or prepared this time around to deal with tariffs, but what we might actually see is longer stimulus, not bigger stimulus. So it's really about the pace of execution. If you flip the board, let's take a look at how Asia currencies are faring, because we are seeing the offshore-onshore yuan weaken despite earlier today managing to clock some gains. And this is on a day where most Asia currencies are actually recouping some of the losses from earlier in the week as the dollar erases some of the post-election gains. Flip the board again, take a look at the CSI 300. This chart will show you how it has been pretty impressive in managing to hang on to the gains from September. Remember that monetary stimulus blitz. And now we are seeing also that on the CSI 300, it is still, despite the declines of today, if we can take a look at this chart, actually managing weekly gains for the best a week in about a month. And there are trading volumes behind this. So it's really up to China's authorities, the legislators, to deliver. Tom.
OK, and we hope to get some details on that in the next couple of hours, of course, from the National People's Congress. How much additional stimulus when it comes to the fiscal front will come through for China? We may have an answer for that in the next couple of hours. Abraham, with the details in terms of the markets in Asia, thank you very much indeed. Let's get to the Fed then. Cutting its benchmark rate by a 0.25 percentage point in a unanimous decision. That was not a surprise, but Chair Jay Powell declined to say whether they will cut rates again in December. He also says the election outcome will not affect what policymakers do, at least in the near term.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
OK, for more on this, let's bring in Bloomberg's Valerie Teitel. Valerie, really, that was where the interest lay. The cut was expected. They were pretty nuanced in terms of where they go from here. But it was the question about Jay Powell's role at the Fed.
Yeah, he appeared to get flustered late in the press conference just how many times U.S. politics was brought up in the question and answer session during the press conference. He did reiterate many times that in the near term, the election has no effect on their policy decisions. His comments were generally taken by the market as quite dovish, and he gave several indications that a December cut is still the base case. If you flip on, though, let's talk about this December meeting, Tom, because it is a big one. The market is on tetherhooks to know whether the anticipated expansionary fiscal policies are going to be incorporated into their forecasts. In December, we get the new forecast for GDP and inflation. We also get the updated dot plot. So if they wanted to make a statement in December, it would be at that moment. A lot of eyebrows are being raised because Powell tried to tamp down on that possibility, saying, we don't guess, we don't speculate, and we don't assume. Some may not be convinced, and it's because December 2016, a month after Trump first won the White House back in 2016, the Fed staff already changed their forecast for inflation. They baked in an assumption of that fiscal expansion. So a lot of questions still raised on whether we'll get that from the Fed come December. But he did reiterate his data dependence. And on that note, let's flip on again and take a look at the data we get next week, Tom. We have CPI on Wednesday, followed with PPI on Thursday. And lastly, retail sales, which feeds directly into GDP on Friday.
OK, a big week for the data on the data front, at least next week. And we'll focus in on that, of course, and see if it adjusts. And is there any changes in terms of the pricing around the Fed's next steps? And, of course, that debate continues around December. Bloomberg's Valerie Teitel, thank you very much indeed. Let's get and continue to focus on the unfolding changes around the political makeup that we're likely to see, of course, in January when Donald Trump takes office. He has picked Susie Wiles, one of the top architects of his political campaign, as his White House chief of staff. She will be the first woman to hold that position. And my goodness, that is a position that comes with a lot of power. Let's get the details from Bloomberg's Vonnie Quinn. Vonnie, just for our international viewers, give us a sense as to who Susie Wiles is. She's been operating in the background for quite some time.
Yes, the ice maiden, as Trump called her when he was saying thank you to everybody for having won the election. She's been around politics many, many decades, Tom. She started out on her first campaign, which was Ronald Reagan's successful campaign back in 1990. Fast forward all the way to 2018, she was the architect of Ron DeSantis' successful gubernatorial campaign. Not only that, but get this, when she became the campaign architect for Donald Trump, it was actually her messaging that suggested that he should distance himself from Ron DeSantis and paint Ron DeSantis as off-putting and out of touch. So she really is a very canny political operator. She will be the first female chief of staff in Washington, D.C., and as you say, she has been behind the scenes. But we're only 2 days post-election, and already so many names are being bandied about for cabinet positions. And this is partially thanks to the order that this chief of staff is putting on Trump.
Give us a flavour then, Vonnie, of who some of the names we should be looking at, particularly when it comes to Treasury Secretary.
Right, some of the really important economic ones there are going to be one of the first, I'm sure, that will be named. So you have a selection of people, and some of these are fundraisers like hedge fund manager Scott Bessent, for example. You also have Robert Lighthizer. He's known as a China hawk, so there would have to be some consideration given to whether investors would like a China hawk as Treasury Secretary. Howard Lutnick, campaign co-chair, he'd of course have to divest, but he could also serve as a quote-unquote special government employee where he wouldn't have to divest anything but could only work for 130 days. So that's another little fly in the ointment for him. Senator Bill Haggerty is another one, but he would be giving up his Senate seat, and Trump may not be willing to give up a Republican Senate seat. So those are for Treasury Secretary. We'll see what comes down the pike. Then you have Commerce Secretary. Remember Robert Lighthizer? Well, he's up for this as well as Linda McMahon, the co-founder of the World Wrestling Federation, who was also campaign co-chair with Howard Lutnick. You have the special economic advisors, of course, and then there's a really interesting one, the Secretary of State. One of the names up here is Stephen Mnuchin. You'll remember him as the Treasury Secretary from the first time round. Another name, Senator Marco Rubio, one-time opponent of Donald Trump and almost his running mate this time around.
OK, all men at this point. Well, did you say World Wrestling Competition? OK.
The McMahons
are
well known in the WWF world, yeah.
Yeah, of course. All right, WWF within the cabinet, maybe at some point in January. All right, Vonnie Quinn, thank you very much indeed for the names to watch as the picks come through and the decisions are being made, of course, by that incoming Trump administration. To the monetary policy of the UK then, switching focus. The Bank of England has cut borrowing costs as expected for the second time this year. It stops short, though, of signalling faster easing, highlighting the importance of, quote, gradual adjustments in the face of pressures at home and abroad.
There are a lot of uncertainties out there, both in the world and there's domestic uncertainties as well. So we've emphasised the word gradual again because we're going to have to take account of how those uncertainties play through. I'm not really in a position, any of us are in a position to say, well, gradual means every so often. That is not a judgment that we make.
OK, Andrew Bailey, of course, speaking to Bloomberg after yesterday's expected decision, of course, not a big surprise. For more, let's bring in our UK correspondent Lizzie Burden, because the interest is not that they cut interest rates, but what the path ahead is, given, one, the budget that you talked to the Treasury Secretary about, of course, the Chancellor, but number two, what Trump would mean for the BOE and for the UK.
Exactly. And I would say, Tom, this was a hawkish cut from the Bank of England yesterday. It was obvious that they were going to cut rates, as you say, by a quarter point, and indeed they went for an 8-1 split. Catherine Mann, the dissenter, partly because inflation is back below the 2% target. But it's the path ahead. And actually, because of the budget, this massive fiscal loosening, the biggest in decades, they see inflation going up again by up to 0.5 percentage point. And they actually say that rates will fall gradually rather than aggressively. So a change of language there. But the governor, as you heard, very careful not to directly comment on the impact of Donald Trump's win on monetary policy, or to blame the budget for higher for longer interest rates. Still, though, when you look at the way traders have interpreted it, this looks to them like yesterday was the last cut of 2024. They've pared back pricing on December from 25% to 15%, and as they look out to 2025, they only see 2 more cuts with a high chance of a third. So that would be less easing than the Fed or the ECB. And if you look at the sterling reaction, it did rise, but I would note, Tom, that's partly because of the Trump trade taking a bit of a breather.
Yeah, that's a really important point that you make in terms of the expected cuts for the BOE being fewer than those for the ECB and the Fed as well, of course. Lizzie Burton, thank you very much indeed, our UK correspondent, breaking down what we heard from the Bank of England Governor, of course, Andrew Bailey, contending with a more challenging backdrop maybe than he had expected just a week ago. And talking of the ECB as well in the central banking space, German politics certainly plays into that. Coming up, Germany engulfed in that political crisis as parties, of course, argue over an election date in that country following the collapse of the governing coalition. We are live in Frankfurt with the latest. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Some breaking lines right now on the politics of Germany, and we're going to get details on this just in the next couple of seconds. The German opposition leader, Merz, is talking to the radio station in Germany, the DLF radio station, giving an interview and saying that Scholz, the Chancellor, and the bid to delay that election until March is irresponsible. That is the line coming through from the German opposition leader, Merz, again, speaking to German radio as Olaf Scholz pushes back on pressure from some of those competing parties to call an election earlier. Again, Scholz is trying to push that back to early next year. Opposition leaders saying that that is irresponsible. Frederique Merz speaking to DLF Radio. We continue with this story right now. Olaf Scholz rejected the opposition's demand then to hold a confidence vote by next week, pushing for one early next year instead. As I mentioned, you have to have the confidence vote before the president of Germany decides on whether or not you get that election. The German Chancellor is trying to hold out until a possible election in March to give his beleaguered party a chance to recover in the polls. For the latest then, let's go straight to Bloomberg's Christoph Rault in Frankfurt. Christoph, we just had these lines from Frederique Merz. Scholz trying to push this thing back. What is the likelihood that he succeeds in that? The pressure seems to be building.
The pressure is absolutely building, Tom, as you say. Good morning. I think it's pretty difficult to sort of conceive that from a current standpoint, Olaf Scholz will be able to essentially just stay in office for several months and with his coalition not having a voting majority in parliament. So essentially, like, their ability to get anything decided, to get anything to parliament is actually pretty limited and very unlikely. So it seems very unlikely at the moment that he's going to be able to sort of stick to his time frame that he laid out earlier this week when he announced the collapse of the coalition.
Christoph, give us a sense of where this leaves Germany. I mean, some in the investor community seem to be betting that you're going to get more fiscal stimulus with a new German government. German equities performed quite well yesterday. What is the expectation from economists, from markets, as to where this leaves Germany and that bid for some, at least within the body politic of Germany, to get more fiscal spend for defence domestically, for the transition, for Ukraine, and, of course, to ensure that there is some kind of defence against potential tariffs from a Trump administration?
Well, I think the market reaction that you just mentioned, I think it sort of signals that there is some hope, at least in the market among investors, that after all, like the last couple of months were a lot about like the infighting within the ruling coalition. They had they really struggled to come to any sort of like agreement, like decisions were being like kicked down the road. That sort of like deadlock is finally easing, and that actually will be changed, and that there will be potentially like a new government in place that actually gets a lot more stuff done, which in turn would also be good for companies, because as we've discussed previously in the show, and as we like covered on Bloomberg News pretty much on a daily basis, there are like a lot of like mounting problems for the German economy, for Germany's like key industrial sectors from automotive to chemicals. So there is really like a clear need and urgency for action.
Christoph, what is your understanding? We're looking at pictures now, not live pictures, but looking at pictures of the CDU leader, the key opposition leader, of course, Frederique Merz. Again, he's just called. We've had a line crossing as well. Merz is reiterating a call for a national election as soon as possible. The CDU are leading in the polls. The AfD, the far right, have a significant chunk of votes as well. What is the likely combination or coalition that is likely at this point to come through if you do get that election? And how willing is the CDU to spend more?
Yeah, that is a good question. The spending ability actually of any new government will actually be quite limited. I mean, one key reason why the ruling coalition sort of disintegrated was about their ability and their willingness to spend and also to take on more debt by the government. Germany has this net borrowing limit in place, which sort of restricts spending to a certain degree. And that is something that will also be, have to be faced by any new government that will be in place. So that's really something that is not going to go away just because the government changes. But generally there will have to be some pretty meaningful decisions in order to basically allow these investments that are really needed in anything from infrastructure, reducing bureaucracy, like to actually really revive the German economy again, because the overall picture looks pretty grim. I mean, the German economy has been stagnating for almost 2 years, and at the moment it's like really unclear when momentum can return.
Okay, essential context for our viewers coming from Bloomberg's Christoph Rauwald as we continue to get lines crossing on the politics of Germany. Pressure from the CDU building on Chancellor Olaf Scholz to get that election earlier than March of next year. We'll see how that story unfolds. Keep across it for you, of course, the consequences for the German economy, the Eurozone economy, and, of course, the markets as well. Coming up, we're going to take a look at what Donald Trump's return to the White House could mean for investments into clean energy in the US. Are they now imperiled? We'll get that story for you in the details. Stay with us. This is Bloomberg. Welcome back. Happy Friday. With Donald Trump set to return to the White House, his second term will have repercussions, of course, for climate action in the US, as well as global efforts to shift to a low-carbon economy. Here to discuss the fallout for clean tech supply chains is Matthew Hales, an analyst in Bloomberg NEF's trade and supply chains team. Really, really timely to have you on, Matthew, given that we saw an impact already when it comes to some of those renewable stocks on the back of this election victory for Trump. He's talked about tariffs being his favourite word. He's talked about China, potentially 6% tariffs there. We know China is a key supplier in terms of the components that go into this renewable shift. How much of a risk is this? What is your assessment right now when it comes to the green energy space?
So, actually, when we're looking at clean tech, you have to look back across the last few years, and really clean tech has been subject to high import tariffs ever since about 2012. And what this has done is it's shut out imports from China in solar since about 2020, and it shut out EVs as well, especially with Biden's hikes to tariff regimes last year. Now, the area where this isn't true is batteries. So the US is still dependent, about 60% of their battery imports come from China. And really, when we're looking at these 60% tariffs, we actually don't think there's going to be that big of an impact. And the reason why is the cost declines of battery prices in China will not only offset these tariffs, but by 2026, we still expect Chinese-made batteries and like Chinese battery projects using, in the US, battery projects using Chinese tech to be 26% cheaper than their US-made alternatives. So what really will change under Trump is kind of the imposition rate. A lot of Biden's tariffs were due to come in 2026. Trump might move that forward. And the big question we have is on the non-Chinese tariffs.
It's really, really interesting detail, really important detail. Matthew, before we let you go, time is running short. Will he undo the Inflation Reduction Act? What is the expectation?
We don't think so. Mostly this is because a lot of the benefits of the IRA are actually towards Republican districts. And so when the House majority is going to be quite a thin margin, we don't expect there to be enough to actually push through any full-scale repeal. Okay. What we think there will be is some tweaks around the edges of how the IRA is implemented, maybe some scaling down on the loan programs, but we think the whole package will stay there, especially the key elements for clean tech.
Really important context. Matthew Hales, thank you very much indeed. From our Bloomberg NEF team, focus on trade and supply chains. Part of that, Gene, really important context as we look at the policy shift, of course, under a Trump administration. There's plenty more coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks trade modestly higher as the Fed unanimously cuts rates by 25 basis points. Chairman Jay Powell tells reporters Donald Trump does not have the power to make him resign.
If he asked you to leave, would you go?
No.
The president-elect picks Susie Wiles to be the first ever female chief of staff at the White House. We're going to look at who else could join the new administration. Plus, the Bank of England warns of inflation risks as it cuts rates for the second time this year to 4.75%. We have some earnings crossing from Sony. We'll bring those for you shortly. We'll check the markets as well broadly. Sony, by the way, still sees full-year operating income of 1.3 trillion yen, slightly below the estimate. Second quarter operating income for this Japanese electronics maker coming in above the estimates, 455 billion yen, comfortably above estimates of 335 billion yen. Across the markets, we are going to check in after another record was set by the S&P and the Nasdaq, a 49th record high for the S&P yesterday, closing in on that 6,000 level. The Fed cutting interest rates, the picture for December looks a little bit more challenged. Will they go again? We're going to get inflation data and retail sales data next week that could inform where the Fed goes next. And Jay Powell saying he's not going to be pushed out by Trump at least anytime soon. European futures pointed gains of 0.2% after some upside yesterday for European stocks, looking to end the week on a positive note. FTSE 100 futures pointed to gains of 0.2%. S&P futures looking flat right now. Nasdaq futures also flat. Bit of a breather after the rally of yesterday. Let's flip the board and look cross-asset. You saw a rally as well. Cross-asset rally yesterday in the markets. You saw money moving into bonds. Yields on the 10-year Treasury fell around 10 basis points. Your US 10-year right now yielding you 4.33. The pound saw a pop yesterday, currently at 1.29, a little softer by 0.1%. Andrew Bailey saying the course of rate cuts will be gradual. $75 a barrel on Brent, down 0.7%. And Bitcoin close to that $76,000 level, currently unchanged in the session. Now, European leaders are increasingly diverging on the role that US President-elect Donald Trump might play in the Russia-Ukraine war. Speaking exclusively to Bloomberg, Denmark's Prime Minister says she had a reassuring phone call with Donald Trump about the US continuing to work with Europe on geopolitical issues.
We had a long discussion about some of the topics that are a big concern for US and for Europe. Of course, the war in Europe, Ukraine, the closer cooperation between Iran, North Korea, Russia, and unfortunately also China.
Well, for more, let's bring in Bloomberg's Oliver Crook, who is speaking with the Danish PM, joining us from Budapest. Ollie, we've been hearing from a number of speakers there. You've been gauging the mood then on the back of this victory by Donald Trump, what it means for Europe. Give us a flavour of what you've been hearing.
Yeah, overall, Tom, I think that the approach for many of the European leaders here is no one wants to sort of be the one to fire the first shot. So everyone is putting on a sort of brave face for what was really not the outcome that many of the leaders here in Europe wanted in the U.S. election. But everybody has been saying, listen, Donald Trump is a pragmatist. We're going to sort of have these opening conversations, and we're hoping really for the best. And that is really sort of the message that we got from a number of leaders. And as you just played there, speaking to Mette Frederiksen, the Prime Minister of Denmark, literally moments after she got off the phone with Donald Trump, she said that it was a conversation that gave her some optimism. She said that they focused mostly on security concerns, on where certain points that they are aligned, like on China, on Iran, on Israel, were some of the topics that they discussed. Also, though, talking about Ukraine. And I asked, do you feel that there is sort of a schism here between Europe and the United States? And she said no, that she's actually very encouraged. But we should also remind people that Donald Trump, in his first presidency, she's one of the few leaders that he has worked with before. He canceled a state visit to Denmark because she refused to sell him Greenland, right? So there are a number of different kind of possible, despite the optimism, obviously sort of bumps in the road possible for these EU leaders. They were discussing Donald Trump explicitly over a dinner last night. So this morning as they arrive, we'll see if there's a more sort of unified and coherent take from them.
Oh, you take me back to that day, of course, when Trump tried to buy Greenland from Denmark. I like her priorities as well, Ollie. She speaks to Trump and then she speaks to you. That is the correct arrangement in terms of priorities. An exclusive conversation with the Danish Prime Minister. Very fantastic reaction and important. Meanwhile, Russia's president, you were talking about this, of course, the tensions there. Vladimir Putin, not giving any sense he's going to give any concessions to end the war in Ukraine, but he does said that he's kind of ready potentially to hold talks with the president-elect. Let's take a listen.
I do not want to comment now on what was said consciously during the election campaign. I think it was said deliberately in the fight for votes. But it does not matter. What was said in the desire to restore relations with Russia to help end the Ukrainian crisis, in my opinion, seems to deserve at least attention. I would like to take this opportunity to congratulate him on his election as President of the United States of America.
Ollie, what are you hearing then? We heard then from the Russian president, and what are you hearing in terms of voices on the ground in Europe at this event, at this meeting in Hungary, about how willing they are to engage with Putin to try to get some kind of deal, or is Zelensky pushing back against that prospect?
So, of course, Zelensky is pushing back against that prospect and pushing back hard. When he arrived at the arrivals yesterday, we were all sort of shouting to try to get a comment from him. He walked directly in. But every European leader, for the most part, has been saying that basically, regardless of what the United States does, Europe needs to continue to support Ukraine. There are, of course, some voices that don't see things quite that way. I spoke to Viktor Orban's chief political advisor yesterday about this very question. Here's what he had to say about how the sort of stance in Europe may need to change as a result of the Trump presidency. Have a listen.
I think so. As soon as we can, all communication channels should be restored, because otherwise, how we want to manage the peace? If we are not communicating with each other, we're just only managing a war.
And more broadly, you know, Viktor Orban and his team have been very sort of involved with Trump in the lead up to this election. They've even been in the United States a number of times. There are reports that they were sort of working on policy proposals together. And for the Hungarians, they're really hoping that, A, this will change sort of their position within Europe, but also will force Europe to move and to change on a number of different things in what this advisor was calling, you know, sort of liberal woke ideology. And that is exactly the sort of thing that we're going to be hearing more and more from a perhaps more emboldened Hungary as time goes on with this Trump presidency.
Yeah, and a broader question as to whether or not Trump emboldens the far right more broadly across Europe as you look at France and Germany. Oliver Crook on the ground for us in Budapest with some really important context, reactions for some key European leaders to the election of incoming President Trump. Joining me now for more on Europe and its defence under a new US presidency is Gorana Grgić, senior researcher in Euro-Atlantic security at ETH Zurich and senior lecturer at the University of Sydney. Gorana, thank you for joining us. Maybe we start there with the international implications of this Trump presidency with a focus on Europe. Do you see splits in Europe as a result of this, or unity as Europe tries to come together, spend more on defence and becomes less reliant on a US administration?
Well, on a declaratory level, it seems that a lot of European leaders, even if they don't necessarily align with the incoming American administration, are trying to at least say that they will find ways to find common ground and work with President Trump and obviously his team. However, you can't help but notice that there are some to whom this comes much easier than to others. And of course, as you've just discussed with your reporter there from Budapest, it seems that the stars, at least those political ones, are ascendant if you are Viktor Orban, or if you are the Prime Minister of Italy, or, you know, the leader of plurality of parliamentary votes in France, etc. So basically, there are differences there across the continent. But unlike 2016, I would say this is happening in a context where all across Europe, in a much sort of greater way that potentially what we've seen in 2016, we are seeing this kind of common cause of far-right populist parties from across the transatlantic space.
Yeah, Gorana, look, you're talking about Hungary. We've had some lines crossing from the Hungarian Prime Minister just in the last few seconds, speaking on radio and saying, and I'm quoting, this is from Orban, Europe cannot finance, quote, the lost war in Ukraine alone. Many would take issue with the characterization that the war is lost. But that is the line crossing from Viktor Orban, and again, reminding us of his affiliations in this. To your point around Trump and the far-right movements in Europe, just to be clear, you think a Trump presidency in the US will catalyse, encourage and lead to further gains for right-wing parties in Europe? That is a likely prospect, you think?
Well, so far what we've seen, and we've seen this actually all throughout the past couple of years, even when Donald Trump was just a former president, he maintained these relationships, and especially the one with Viktor Orban. So now, given the sort of expanded map and mandate that Donald Trump has, but that also Republican Party is now essentially the platform for this type of illiberal movement has in the United States, and you know, United States place obviously in the world and its repercussions on Europe, but obviously reverberating much further and wider than that. It does provide a license to leaders who have similar proclivities. So in that sense, we will be looking, of course, how this plays out over the coming months. But for sure, it seems that so far, President Trump will have an easier time cooperating with the likes of Viktor Orban or maybe Giorgia Meloni and others.
How vulnerable is NATO at this point?
Leading into the election itself, we already had the two distinct sort of visions of what future might bring, given the sort of differing perspectives of the two presidential candidates in the United States. And I think, again, based on the 4 years of Trump administration, which were marked by a lot of transatlantic security crisis in the sense of alliance management. And of course, we have to put that into historical context and say that some of these problems were not necessarily just the product of the Trump era, but no other American president has questioned U.S. commitment to NATO to the extent that President Trump did during his time in office. So from that and knowing what some of the policy proposals have been swirling around and some of the well-proclaimed stances on part of his now vice president-elect, as well as some other associates who might end up landing jobs as national security advisors or potentially secretaries of state and defense, it is hard to see how President Trump would act as some sort of elixir for NATO. It is going to be then a question just of the scale and magnitude of the policy direction change when it comes to NATO. But I think that the direction is pretty clear, and that's one that moves away from tighter transatlantic bonds.
OK. Gorana Grgić with the analysis, senior researcher in Euro-Atlantic security at ETH Zurich and senior lecturer at the University of Sydney. Thank you very much indeed. Later today, we're going to speak with France's European Affairs Minister as well on this topic, Benjamin Haddad, on how Donald Trump's election could affect the continent's relations with the US. So that is certainly an interview worth tuning in for. That's at 9:30 a.m. UK time. Coming up, investors rethinking some of their Trump trades as they weigh the president-elect's economic agenda. We're going to get the latest on the market reaction with Frederique from RBC Wealth Management. That is next. This is Bloomberg. Welcome back. Happy Friday. Now, after an initial stampede into Trump trades, investors are tapering their enthusiasm as they question whether Donald Trump, as a president, will be able to push through his ambitious tariff proposals. The dollar and Treasury yields have reversed much of their post-election surge. But, of course, you got fresh records on US stocks yesterday. And if they get the House pushing through things like tax policies, will not be an issue. And, of course, tariffs are at the behest of the president anyway, with executive power. Let's bring in right now Frederique, the RBC Wealth Management's investment strategy head for UK and Asia, with a view on how these markets are repositioning against and around a President Trump. Have things gone too far, too fast?
Well, that's what we're looking out for. We agree that a Trump presidency is moderately positive for the U.S. economy. It's also moderately good for U.S. equities. There's a revival of animal spirits. There's the end of business uncertainty. And there's the fact that the U.S. Consensus position in equities, which is an overweight, is going to remain intact. But there are also cross-currents. And you mentioned tariffs. We think that tariffs is one of the first action that the president will take. The playbook is that these negotiations tend to be acrimonious. So that is a red flag to look out for, perhaps in the first quarter, as early as the first quarter next year. You have high valuations and you have yields which are going up, which could be a headwind to equities. So we are looking for a potential overshoot of U.S. equities if they become too expensive, if investors become too optimistic on the outlook. We would take that opportunity to perhaps fade slightly the overweight in U.S. equities and invest in other asset classes, yields, as you mentioned, very high, and that could be a good entry point. OK, well, let's talk about that valuation story. We have a chart that shows what's been happening in terms of the valuation of U.S. stocks versus their European and Asian peers. And on some measures, the valuations have not been this rich. At the highest level versus their European peers since 2006, versus the MSCI Asia-Pacific Index, the highest level in 19 years. And yet, on many metrics, as you say, you'd have to be pretty brave to bet against US stocks. When does that valuation story become a real headwind for the US equity story? We think that there's a little bit more to go for in US equities. The gap in valuations that we're seeing is mostly due to the U.S. exceptionalism. Companies there continue to generate good, healthy earnings growth. In Europe, the situation is a lot more difficult. We've seen a forecast being downgraded for the stock index as a whole, wiping out much of the earnings growth for this year. And potentially with tariffs next year, if they do happen, the relatively meager earnings growth in Europe could also be downgraded. So the outlook overall for Europe is a lot more tenuous. On Germany, do you want to be betting on German stocks in light of maybe a new government that wants to spend a little bit more? Do you want to follow that trade? Our bets are not based on countries. Our bets in Europe are based on global leaders, these companies which have a very strong franchise worldwide, but happen to be listed in Europe. Many of them benefit from structural trends in digitization, in electrification, and these trends, we believe, are here to stay. There's also a very strong tradition of healthcare in Europe. So these companies are the focus of our attention, and sometimes a reporting season where there are hiccups in reporting can give some opportunities to build positions. What has the earnings season told us about the resilience of corporate Europe? It has told us that life, particularly for companies which invest in China, is very, very difficult. So European companies which export to China with businesses there are really struggling. And that is the main message that we are hearing throughout. OK, yeah, the China story. And Richemont was a reminder of that with a miss today. And that was partly down to what's happening in terms of the softness, in terms of demand for luxury in China. Just before we let you go, what is your sector preference at this point, whether it's Europe or the US? So we think the financials in the US are likely to benefit from deregulation, energy potentially as well, so long as...
And that window to get exposure to those sectors, that's still open. That's not fully priced at this point.
That still continues as far as we are concerned. We think the possibility of M&As is now more interesting. We are mindful of industrials, materials. These are sectors which suffered the most during the 2018 trade war, and industrials in particular are already quite expensive. So this is how we are positioned.
OK, further to go, maybe, for the banking and energy stocks of the US. Frederique, Grgić, Head of Investment Strategy at RBC Wealth Management, with how to think about these markets in the context of a Trump presidency. There's plenty more coming up. Stay with us. This is Bloomberg.
I think they're still going to cut again in December. That said, the Fed wants to start talking about calibrating rate cuts to the economy, and they're not going to be wanting to pull rate cuts, do as many rate cuts sequentially, I think, in 2025.
The devil will be in the details, I think, both on trade policy and fiscal policy. And I don't think they need to make any big decisions at this meeting or the next meeting about how they'll strategize for 2025.
How do you get from here to there? Yeah. It could be a number of quarters. You've got to preserve the economy in some sort of steady state. We're too high right now.
It's going forward, it's all data dependent anyway. There's not even probably going to be strong forward guidance for December. So, forget about 2025 in terms of forward guidance.
Some of our guests reacting to the latest Fed decision. Of course, no big surprise they came through with that 25 basis point cut. No big surprise, really, that they were unanimous. You were not unanimous when it comes to the Bank of England. You had one, of course, Catherine Mann, holding out in terms of that decision. But it was unanimous for the Federal Reserve. They did remove a line, interestingly, around the greater confidence that they had. That was in the previous statement. They removed the line about achieving greater confidence that inflation is moving sustainably to 2%. Maybe that is giving themselves some wriggle room if you do get some of this policy that comes through from the Trump administration around tariffs, around immigration, that could prove inflationary. The lines, of course, and the expectation from them economists there. The labour market conditions have generally eased. That was a key line as well. And claiming that there's so far no effect on policy, at least in the near term, when it comes to the new presidency. We'll see, of course, how that adjusts. You have inflation data out next week, CPI, PPI and retail sales as well. Maybe that keys and leaves some adjustment in terms of how we think about the next steps for this Fed. Finally balanced in terms of December, of course. Markets essentially split on whether or not they go again in December. Let's flip the board and have a look at what Powell was saying in terms of expectations on that front then. Does not rule that in or out in terms of the December cut, so he wouldn't be drawn on that. The data dependency coming back to the fore for this FOMC. Beginning to think about slowing the pace of cuts, and to what extent and how far that slows again as that policy agenda of the incoming Trump administration gets crystallised will be key for these markets. Saying that they can move quickly if the labour market deteriorates, though we have seen some indications that the labour market is starting to strengthen a little. Some of the softness that had been there earlier in the year starting to be washed out, at least on the margins. In terms of expectations then around the Fed, as you push out into 2025, expectations that maybe you get 3 cuts and you get to below 4% in the second half of that year. Currently, the rate is between 4.5 and 4.75%. The opening trade is up next. This is Bloomberg.